Once again, thank you all for coming out. This is all around New York broker registration and commission disclosure. We are so happy that you are here with us today. And with that, I'd like to hand the floor over to Nate Richards, Enerex's CEO. And Nate, you now have the floor.
Morning, everybody. Glad that we could make this happen today. Obviously, this is a very fluid and dynamic situation with dates moving. Thanks for working with us as we did a bit of a reschedule to slide it out a week. We learned some new information. No bombs have dropped since the last time we moved the date, so we decided let's jump on and talk about what we know as of today. It's probably good to get some information out there, and I've got two fantastic ladies joining me today. Let me share my screen. Greg, I think I need you to stop sharing so I can switch to get my slides up. And Craig. Okay. Well, wow, Craig, I'm going to text Craig because maybe he's not hearing me since he got us going. But in the meantime, Shannon and Michelle, why don't we go with Michelle first? Michelle, would you just do a quick intro? And I'm going to try to pull up your headshot slide of our panelist page in the meantime. But in the meantime, why don't you just give us a quick background, and then let's go over to Shannon.
Sure. My name is Michelle Paisecki. I am a partner at Harris Beach, which is a Northeast law firm. We specialize in pretty much all aspects of law, but I'm a member of our energy industry team. And one of the areas of my practice is related to the retail energy market. And we represent a number of ESCOs and brokers with respect to this law and others as well.
Thanks so much. Okay. Looks like maybe I can share. Shannon, why don't you pick up from there?
Sure. Good morning. My name is Shannon McGriff, and I currently serve as the Executive Director of the Energy Professionals Association, commonly known as TIPA. We are a not-for-profit industry organization of energy professionals, mainly dedicated to help advance competitive markets and provide professional development, advocacy, education programs, and a lot of networking and meetings and conferences across the U.S. So happy to be here. Thanks for having me. We've been talking about this a lot.
Yeah. And speaking of, Shannon, I just wanted to also mention that today is almost maybe a sneak preview. We won't quite have the breadth of panelists. I know next week we're going to be in person in New York. Both Michelle and I are rejoining you on Thursday on the 26th at Convene, 101 Park Avenue. And there's a segment of that day. The day is about more than just broker registration. Obviously, it's a sort of an overall Northeast energy market deep dive with market data, typical TIPA. If you're not a member of TIPA, please come check it out. I know that we offer to potentially scholarship some brokers or suppliers that are not members that want to come to the meeting. If you want to meet and come, we highly encourage it. On our resource page, we've been offered to potentially help you cover some of the costs because we think it's such a great organization. And again, we'll be joined next week by Matt Kinney, who's head of legal and regulatory for a large Northeast broker, Mantis Innovation, and then Jeffrey Levine from NG. Heard him speak last year when this was still sort of percolating, the final order not necessarily set yet. Had a lot of great things to say. I know I learned some things listening to Jeffrey last year. So excited to join next week in New York. Shannon, anything to add?
No, I think that you covered it well. I think you said Thursday. Our event's actually on Wednesday.
I apologize.
No, we're usually on Thursdays, so that is a little bit off, but we were.
That is why I slipped it, because it
is.
No,
yeah, you're good.
Okay, so Wednesday the 26th is the correct day.
Yeah.
Awesome. And the event starts at 10:30. for registration, right? And check-in, or?
Yeah, it does. So 10:30 will be registration and check-in, and then we'll kick off around 11 a.m. with our opening remarks from our president as well as our platinum sponsor. And then our panel will be the one that opens the meeting at 11:15. And then we'll break for lunch, and then we have kind of a full day of content after that. So you can find the full agenda on the website. You guys can reach out to me or my team. We would love to have as many brokers there as possible to kind of help spread the word like we're talking about here today. I think the more information people have about this, the better. So just reach out to any of us. And Nate, we really appreciate that offer of helping sponsor some folks there. New York is not a cheap place to host an event.
No, no, it's not. But you will, TIPA membership has grown over the years. This is just a first-class organization. Anyone who's been around for this industry for any length of time knows the level of quality of content and learning, and also advocacy, which is an increasing necessity as we look at the kind of battles being fought around the country in different open market, competitive market states, where we've got to represent our industry and our customers in legal ways. Really quick, as an intro for me, Enerex. I'm CEO of Enerex. Enerex has solutions for brokers and suppliers. So brokers and consultants in New York, ESCOs in New York on the supplier side. We are probably the largest by far commission processor. I just checked, and we've processed over $1 billion in commissions paid to brokers from suppliers through our craft product. And so significant systems and controls around commissions and sales. That's kind of our solution set. We're also announcing today a launch of a new product called Insights, where we are using some crawling and some AI to consolidate license activity across all PUCs so that you can now monitor counterparty risk. This is something that's not new to New York. There are other states that have requirements that paid to commissions, you have to verify that someone is a licensed or legal counterparty, whether it's a broker, aggregator, consultant, and so forth. So this is something that's really just growing and being extended in New York as far as the responsibility to monitor who has what licenses in what states and can we pay them and that kind of thing. So a new solution there. Okay, that's all of the sales that we're going to do today. Try to keep it super short, but that's a cool new announcement of something that we have gotten a lot of interest in and been working on for a little while now. Actually predates the New York market changes, so it was kind of a good time to bring it out. But let's talk about our topic for today, which is really these regulatory changes in New York. And we kind of group this into, there are some impacts to brokers, and I'm using that as kind of a collective term, aggregators, brokers, consultants. Obviously, we know on a national level, there are a number of different terminologies that are used from state to state to describe this kind of third-party broker concept. In New York, that's a broker or consultant. And then suppliers, again, New York, it's an ESCO, again, varies by state. But there are impacts to these roles as a result of these changes. And I'd like to maybe just take today to hear from some experts who've done a lot of time on this topic to kind of just walk through what those impacts are. This is just a summary slide. We're going to make the slides available at the end. And so the deck today is really more of kind of a resource to hand out afterwards. We're not going to just read you guys slides. I know you want to hear from Michelle and Shannon on what these are and how they're being perceived. But in order to do that, Michelle, I would love to tee you up as the lawyer on the call and someone who's not just been involved in this issue, but has been involved in New York energy market regulatory proceedings for many years. Can you kind of just give us the background? How did we get to where we are today?
Sure. So in terms of this specific legislation, it came not from the Public Service Commission, but actually from a lobbying effort in conjunction with the New York State Legislature to get passed. Traditionally, the Department of Public Service and the Public Service Commission have been pretty clear that they didn't want to regulate this market. I think for some of the reasons that they're going to experience, it's more cumbersome than they probably even realize. So it's a lot of work that's going to be needed on their part to actually regulate the market. So traditionally, they have always regulated brokers and consultants through suppliers. But there was a bill that was actually initially circulated in 2018, 2019, which is now this law. And it didn't pass. Actually, a couple of smaller market suppliers originally were supportive of the bill, and I think helped draft it. And it got picked up back. It got picked back up back in 2021 and 2022, and ultimately it was passed by the legislature and adopted by the governor in late 2022, and then took effect last year around this time. Actually, 1 year from tomorrow. And the Public Service Commission was only given 180 days to kind of implement the law before it took place, before it took effect. So throughout that process, the Department of Public Service staff came up with a proposal for what the rules were going to be, and the commission adopted the broker order, which is what we're calling it, 1 day after the law actually took effect. Immediately, there were a number of petitions for hearing to kind of, extend the deadlines for compliance, to try and identify, and clarify some of the definitions and how the law would actually be implemented. There was a stakeholder meeting that occurred last August, and then the commission issued another order earlier this year, which set the deadline originally to this past Monday, but that has since further been extended, and now we're in a situation where we're waiting for another commission decision, possibly on an outstanding petition for hearing, potential lawsuits to further extend the time frame or kind of clarify some of these rules. And ultimately, the registration deadline is currently set at July 31st.
Fantastic. Fantastic. That's Shannon, do you want to add anything in there? Just I think that kind of role that TIPA's played along the way also is interesting to highlight.
No, I mean, I think Michelle did a really good job with the summary of kind of where this started and the changes that we've seen along the way. And I think just I will, for a disclaimer for TIPA purposes and personal purposes, I am not a lawyer. I have been playing one for the last year and a half when we are, working through all of this. But definitely default to Michelle or your own counsel. These are a lot of opinions on my part, not so much advice. So just keep that in mind. But no, I think you covered it very well from a timeline perspective. What we have seen is a lot of changes, right, a lot of stuff coming out and being laid out, and then a lot of going back and making some edits. So I don't know if we anticipate, Michelle and I talked about it yesterday on the prep call or the day before, not really anticipating a whole lot more changes from the Public Service Commission. It would be coming, legally in lawsuits or more, filings. So that's kind of what we're keeping an eye on.
Right. So I think the takeaway maybe for the audience is we have what we have at this stage, as far as we know. This is going to go forward in some form for the time being, until some other action were to come along and sort of have some sort of staying effect there. I did include in the links a link to the original text of the law. I think there's a lot of filings that reference, well, the law didn't actually say, or the law used this terminology. And I think it's there's not maybe a clear, simple encapsulation of what is this actually the law part. So I added a link here just as convenience for those who are going to pick up the slides after. So I want to just talk through what is registration. Brokers and consultants. We just mentioned the deadline of July 31st. Maybe Shannon, TIPA published a really nice brief that kind of summarized kind of in more lay terms, less kind of DPSEs or legalese. Could you maybe just talk a little bit about kind of how TIPA's interpreted this, or what the takeaways are for broker members of TIPA?
Yeah, for sure. So we basically, after that technical call that took place where there was a lot of questions and not a lot of answers, we went through and took the order and kind of broke it down to the parts that we thought were applicable to the broker and consultant members, especially TIPA members, right? So that document has been sent to all TIPA members. It probably got circulated past that. We're happy to share that with anyone and everyone because we know that this is confusing and we want to help the industry as a whole. So basically, if you receive any sort of compensation related to an energy deal, a brokered or a consultant deal, you must register as a broker or consultant with the state of New York. So, you know, a lot of times when these registration processes go into place, you can just roll up under your company's license or registration, which would work even if you are a 1099. That is not the case here. You must be a W-2 employee of the broker or consultant that you represent in order to avoid the individual registration. Otherwise, if you are a 1099 of one of the, many third-party broker platforms out there, right now they're still requiring registration. So there are definitions that were actually outlined in the legislation for broker and consultant, whereas we view those as being kind of backwards and switched. So yeah, I think the majority of the industry views those as switched. And so
not only switched, but just sort of just completely, if you were going to make the tiers, this isn't how you'd make them. So
yeah, and my thought, and something our membership has talked quite a bit about, and we went through this in 2019 in Texas, where we created a broker registration process. And so I've also learned people in New York don't really like hearing, hey, this is how we did it in Texas. So I've tried to stop saying that every time I meet with people, but
hang on, I gotta tie up my horse.
Yeah. So we did not separate broker and consultant in our registration efforts in the state of Texas.
Right.
And I think that just helped for an ease of transaction and an ease of business. We just put them all under one, under the word broker. And so I think that would be really helpful here to clear up a lot of confusion. And that's something that I did propose to the commission, but because the definitions are in the legislation, they can only follow what the legislation says. So right now there's definitions.
A great point.
Yeah, and that's not
they're not going to go and change, the letter of the law. They're not in the legislative branch, right? Then we're talking about the executive branch now. They're stuck carrying out what they're given, for better or for worse.
Correct. So basically the registration requirements include a form that you must complete, and then that can be submitted online, but all of the registration fee has to be paid via check. I don't think that the state of New York allows the registration fees to be paid online right now. So it's a $500 registration fee, and that is for either the broker or the consultants. Pretty standard, kind of what your agreement looks like, some, your LOA, kind of just like a little bit of company background, if you will. I don't think anyone has any issue or concern with those. I think the biggest hurdle for a lot of our smaller brokers and consultants come from that letter of credit. And that's the only financial accountability that they're accepting. They aren't accepting a bond or an insurance policy. So I think that's, Nate, if we're diving into kind of the issues and concerns, that's the biggest thing the group has.
That's certainly a huge financial concern, and logistics. How many small businesses have a level of banking relationship that they can go in and ask for this type of security document? This isn't a checking or money market account. This is something that's going to require some technicality and some credit worthiness. And the bank may even require you to hold against cash deposits. And so now you could look up, I have several customers that maybe aren't headquartered in New York, but do a significant amount of business in New York. Let's say they're in Boston or New Hampshire, or, and in chatting with them anecdotally, I have many of them are just going to let their book run out. They're not willing to tie up $100,000 to continue to roll over contracts. It's just not it's not a financial reality for them. They just don't do enough business in New York. And so I think you can already see some of the chilling effect of this on the market. Those are less service providers. Who's going to address those customers? I'm sure other brokers would be happy to take those customers, but I mean, ultimately, the reason that there are the number of participants in the market we have is because customers need service. These people are providing service and a good relationship with these customers. And, now they're stuck having to make this decision around tying up a significant amount of money, potentially, depending on your relationship with the bank. Obviously, that's not a black and white issue as far as what a bank will require to issue this letter of credit for you. But many banks are going to require liquid deposits because the way this works is if you get a fine or the PSC says, hey, you have to pay me this amount, the bank has to issue the payment. And so a lot of banks are going to require that, being liquid in the meantime. I marked, speaking of the questions from the audience, I did mark the third question that we got as answered live, because I think, Shannon, you just answered it. There's a question around this letter of credit, like, would a surety bond, like most other states, not be acceptable? And I think if you pay attention to any of the filings, virtually all of them reference this bond issue, and including the technical conference. There were many questions on the YouTube about this bond versus irrevocable letter of credit concern. I think the position of the audience and the market is that number one, the law doesn't say it must be a letter of credit. It says bond or other instrument. And it's this is one of those lawyer, where's the or, and is there a comma type of questions in my mind? Like, does it mean that they have the ability to choose amongst a menu of options, including a bond, and it's up to the PSC to sort of pick from their preferred instrument? Or does this mean that they have to offer a bond or other instrument inclusive? So, Ms. Shaw, I would love to hear your position on that as an attorney who makes probably a lot out of an or and a placement of a comma. How do you look at this issue as just from someone who's so involved in the regulatory space?
Sure. Let me just preface this by saying nothing that I say today is intended to serve as legal advice to anyone. You are encouraged to contact your own attorney. If you don't have anybody, you can certainly contact me. So with respect to the letter of credit, I do think there's been a lot of discussion around that. I know that there are some folks currently who are deciding whether or not they want to pursue litigation around that point specifically. We are currently exploring with folks whether or not they want to pursue that point. So there may be some action around whether or not surety bonds should be acceptable. From the language in the law itself, it certainly suggests that surety bonds should be acceptable and that the commission has authority to allow other forms of financial security that are in addition to the surety bond, not at the exclusion of the bond. But that is not the position that the commission has taken. And just in terms of a little bit of background on why I think the commission has really only allowed for letters of credit, this goes back to when the data security agreement was being reviewed and negotiated. And there was a lot of stakeholder meetings and discussion around the utilities being able to go after suppliers if there's a hack that it impacts their utility system and protection of customer information. And one of the biggest points of discussion was about the effectiveness of surety bonds. And from the utilities perspective, they were very difficult to call upon. And
it's an insurance claim, basically. You're basically filing an insurance claim, so it's a different animal in terms of the ability to collect, for sure. That's a valid point.
Yeah, and a very lengthy time in which to collect if you can collect. And the Department of Public Service shared some of those same concerns with folks on the supplier side who had, in their opinion, defaulted on certain obligations and then left the market, and then they weren't able to collect from those suppliers as well. So that's kind of why I think they focused on letters of credit.
Right. Yeah. So insurance is versus incident date. you know, that their coverage only when claims are made. So if you're late to the party and the person's gone, right, then the insurance doesn't pay if it's claims made. So
Yeah, absolutely. And one other point I wanted to make, because you raised this in terms of there are a number of brokers and consultants who are right now trying to identify whether or not they want to consolidate or leave the market. And I think one of the biggest considerations around that is that once the letter of credit is in place under the current requirements, it requires written authorization to be rescinded. So if you're one of those suppliers who have to post the full amount, whether it's $100,000 or $50,000, and then you decide, you know, a year from now that you want to exit the market, there's a period of time and some process, which right now hasn't been determined. There is no stated process around this right now, that will be required for you to get that money back.
right, to get out from under that obligation. So that's some really great awareness. I'm going to mark this guy done. There's another question that came in, and I'm going to rewind us a little bit from the letter of credit, maybe back up to who must register. There's a question about would a call center need to register as a broker or consultant? And I'm going to just reiterate what Shannon shared, which is I think that the generally shared opinion here is if you get paid in relation to, and it doesn't have to be directly, it's any indirect compensation, you're paid through another party, you're downline of someone. If you gain compensation that's related to an energy transaction, you're a broker or consultant. I mean, I think that's the position of the New York market. I'll put the, I'm supposed to click this, answer live. Shannon, Michelle, you guys tend to agree with that interpretation?
Yeah, I mean, we're just erring on the side of caution. So if you are compensated in any form or fashion, as of right now, you need to register, yes.
So if you're involved in facilitation of a contract, yes. If you're a call center that's just handling customer complaints, yeah,
Statement. We didn't get any context here as to the nature of this call center in the question itself. But if you're on the selling or marketing side, and you're touching any purchase process, the law refers to procurement, right? If you're involved in the procurement of energy, so that to me is purchasing.
Well, and just as of a note, I've been on several calls with larger ESCOs whose customer call centers, when a customer calls in to ask a question about customer service, they are trained to also say, oh,
hey,
you know, your contract's
coming
coming
like
up.
Yeah.
You know, would you
like to add a green option? Yeah.
And now they fall under this category too. So there's a lot of confusion on both sides of that. But yes, see, that's that lawyer opinion I'm giving you.
Customer service minus upsell.
That's a good one though.
No, not a broker. Customer service upsell. Now you're a broker.
Right. Yeah. So it's just one of those things there. I think we're all trying to clarify. I think the general consensus would not be the case, right? If you're representing an ESCO, the person who's answering the
under
phone
single brand as them, right?
Yeah,
that would be more like agency as opposed to
Yeah.
brokering, where you're sort of working between multiple. That's also some kind of vagueness under the written order. There are various places in the UBP that refer to supplier agents. There's a defined term, and sort of where does agent end and sort of broker consultant begin has been another kind of point of contention and need for better definition.
Yeah, agreed.
Okay, so I'm going to mark the call center one done. I'm just going to skim through these other questions, see if we got any off of this kind of general registration broker requirements topic. Yeah, I'm going to mark this one. So there's a question about the LOC needing to be maintained for the duration of the contract. I think Michelle sort of spoke to that already. So I'm gonna mark that one as answered. And the answer is, in order to revoke it, it's an irrevocable standby letter of credit. You need written authorization from the PSC. So, and I think they would probably look to keep that in place as long as you had contracts, because what if you were to do something that generated fines or liability? They're going to want to be able to have that resource available so long as you're still having kind of a presence in the market. It's a question about GPOs and other associations. I think that's another kind of, you know, it says other associations. I know that I have some broker customers that will make contributions to, let's say, a chamber of commerce. I'll just pick a random kind of organization. Could be an industry trade association, could be a homeowners association, could be, right. And as part of their kind of co-sponsorship, just like you were to go sponsor an industry trade association, you pay them for the right to show up and sort of provide or make offers to provide these services. With that, now we're talking about the homeowners association needs to register because they're getting kind of paid by the broker. So, you know, back to Michelle and Shannon. I mean, we can keep pushing this right out into these situations, but these are real. This is how the market works, right?
I don't know what GPO stands for. What does that stand for?
I think it's a group purchasing organization, like a co-op. Like sometimes they're organizations that wouldn't call themselves a broker. They say, oh, we do outsourced purchasing on behalf of our customers for groups of people, maybe even in the aggregate, right? Some group purchasing organizations are sort of like, we, instead of you buying paper clips and you buying paper clips, we'll just buy paper clips for everybody and we'll get the low price by aggregating the demand for paper clips. So that's my interpretation of the GPO, and then other kind of associations who maybe aren't primarily energy experts, but they're just sort of moving contracts. I would say yes, Michelle.
Yeah, and so there's a lot of gray area around that. I mean, there was some discussion too about in a similar vein, like building management companies who go out and purchase energy on behalf of their tenants and commercial tenants and that type of thing. And that was actually one of the things that was discussed during the stakeholder meeting, and then falls somewhat along the same lines as a referral program. And the commission has looked at both of those as, if you're getting paid and you're referring customers to enter into a contract with the supplier, or you're involved in the process for, ensuring a ultimate end user is enrolled with a supplier, and you're getting paid for that, then yes, you have to register as either a broker or a consultant.
Okay. We had a related one I'm going to mark it as closed, which is around a business that works as cost savings. So this is, again, slightly another riff on the kind of broker consultant model, which is someone who's doing a kind of general contingency-based fee. Let's say like, hey, I'm going to come in, I'm going to look at your bills, energy, paper clips, food, whatever. Anything if I can save you 20% across the board, I get some sort of shared savings type compensation. I think the question asker here is asking, what I'm reading between the lines is, hey, there's no direct line. Like, I'm not actually saying if I do energy, then I get paid this per unit energy, but there's sort of this larger envelope of services of which energy maybe is a smaller part of, and I'm getting a sort of aggregate fee. Am I a broker?
So utility rate consultants, which could tend to fall under this category depending on what activities you're actually doing, are not necessarily considered brokers or consultants. If all you're doing is looking at customer bills and advising on how they could potentially modify their purchasing behavior to save money or have the best contract, and you're not actually referring them to a supplier or recommending that they enter into a specific agreement, then you don't really fall under the definition of broker or consultant. You're providing them with options, and that's a separate service. But if you're recommending or involved in the process of having them ultimately enroll in a contract because of advice that you're giving in reviewing those options for them, then you do.
I think that's very well said. I think we keep getting, well, what about these guys? What about these guys? Referral agents. Yeah, I think Shannon, kind of, you already covered this. Like, if you're a 1099 and you're getting paid either from a supplier or another broker, you're a broker in New York.
Yeah, I mean, I think we could run down this list, and this gives me PTSD from that technical conference, right? Where it was like, but what about this? Or what about this?
Every time I close one question, we're getting two more. So
yeah, and I think that's why my general view is that if you at all think that you fall under this definition, before doing business, you should be registered, right? Like that, I mean, or consult with an attorney, call Michelle and run those scenarios by
Right.
her. But like,
Right.
I'm not qualified to tell you if then this, right? Like, I don't want anyone thinking that, you know, on this call, we're saying like, no, you're good, or yeah, you're. So my general advice is going to be, if you think you may fall under any of their requirements before you do business in the state of New York, I would register.
Great. I'm going to close one more off of today just to get off of this topic and wrap up this slide. And that's a question around, do we know of any banks that are issuing these sort of letter of credits in accordance with the DPS format? I did actually reach out to a couple of brokers who I know will be, you know, registering and continue to do business in New York. And I did hear from one that Frost Bank, which is oddly a Texas bank. I don't know if this brokerage has a Texas office as well, and that's sort of where the relationship came from. But they were able to successfully get what they needed per the DPS requirements from Frost Bank. So that's not an advertisement for Frost Bank, but there are banks doing this. If someone wants to reach out to me, I'm happy to also, if someone has a set of banking relationships that they want to provide, send them to me. I'd be happy to circulate. I mean, we want to help people, you know, continue to do business in the market. If there's a resource that we can add or a link or a contact to share, we're happy to kind of be a clearinghouse for that and get those together and get them out to people. I have another user here saying Citizens Bank said they would provide it. I don't know what that counts for, but just to share with the audience another potential resource. Okay, so let's move to kind of this next step. So now we're registered. So whatever brought you to deciding you need to register, now you're registered. So let's look at day one. I'm a registered broker consultant, or I'm an ESCO doing business with registered broker consultants. There's this new responsibility that we have, which is commission disclosure or compensation disclosure. So I think the number one takeaway is both brokers and suppliers or ESCOs must disclose, and they have, you know, some different forms of doing that. Shannon and Michelle, you guys want to talk about, you know, kind of this disclosure responsibility in general?
Yeah, so I would clarify that to say that the responsibility for compensation to be disclosed to customers falls on both the broker and broker/consultant and the supplier, but it doesn't have to be disclosed twice. If it's going to be included in the supplier contract, that's fine. But because the obligation to ensure that it has been disclosed falls on both the supplier and the broker consultant, there are certain protections that a broker or consultant are going to want to have in place if everything is going to be included in the supplier contract, just so that they can prove that customers were provided with that information, and then, you know, they're not forfeiting commissions if there's some sort of dispute about that at a later date.
Yeah, I think we've got, you know, I think it refers to this customer agreement concept. And I think it's almost strange to kind of refer to the language used in the orders because it's so foreign to the way this industry works, doesn't use the right terminology, doesn't use, not for the participants, not for the instruments. You know, most brokers don't have a QA and market training, you know, standard process documented. You know, these are things that maybe you're more ESCO kind of oriented instruments, customer transfer notice, and most brokers don't have any form agreement that does these things. In fact, the Family Energy filing recently from the last couple of weeks refers to a lot of this kind of drag across from the ESCO world that is a weird fit in the broker consultant world as one of their objections. But many brokers do have some form of agreement with their customers. Whether that's an exclusive agreement like an LOE that we might find in a lot of places, or some other form agreement that says, you know, this is our relationship. You know, I do this for you, and this is how I get paid. And I think it does sort of say, if you have a customer agreement, you have to disclose, and you're going to get paid for these services, and you're a registered broker. In that agreement, you have to make a disclosure. You said it's fair, Michelle, as a broker consultant.
Yeah, if you're choosing to disclose it that way through a customer agreement, then yes, which I don't think is how the majority of the market works, but
Right.
It's certainly out there for some folks. In terms of the actual disclosure itself, it needs to be either the price, if you have a set price that you're going to be charging, or it needs to be the formula for how the price is calculated, which I think is going to be the majority of the disclosures,
Right.
because you don't know the customer's usage at the time, and typically it's tied to
Unit
usage.
time. Right.
Yeah. But that does all need to be disclosed. And there are some like non monetary disclosures that also need to be included. Any type of compensation, whether it's monetary or non-monetary, like tickets to
You
something,
mean like if
or
a supplier were to take a broker out to play golf or something?
yeah. And actually,
Doesn't happen in this
the
industry.
letter of credit is one that could fall under that category, because you can be sponsored in your letter of credit. You could have a relationship with a supplier who has relied on you and wants to ensure that you continue to stay in the market, and they can put up the funds necessary for you to obtain the letter of credit if you're not allowed to do that yourself. But that would also need to be disclosed in the
As
agreement to the customer.
Yeah,
Yeah.
that's a great point. That's actually a really interesting non-cash kind of form, which, as we all know, is also compensation. Shannon, do you feel like there's any kind of point of view from TIPA? Obviously, you've been in this from the beginning, just around the disclosure components.
No, I mean, I think you guys have it covered, pretty well. They listed initially kind of some acceptable methods, and they talked about kind of a fee per unit, a reoccurring fee, a flat fee. And so one of the requests that we had made to the commission in our meetings, was some general sample disclosure statements to make that uniform. We thought that we talked to members, we talked to suppliers, and a lot were a fan of that. So it wasn't giving one competitive advantage to one group over another with like wording things a certain way, right? And so we were asking them to come up with a few different standardized disclosure statements. They decided not to do that. And so it's up to the individual ESCO or the individual broker on how they want to write that disclosure statement. So I think it's just something we all have to be mindful of, right? Like to make sure you're meeting all those requirements.
I know with Kraft, and obviously we're issuing statements and calculating those commissions for many large suppliers. There's definitely been a lot of conversation about this form. For the known components, obviously, I think the requirements are what has to be disclosed up front, and then if there's some unknown tail to this, whether it's a non-monetary kind of tail, like, and you may win broker of the month, and we'll have a pizza party, or some other, like Michelle's example, non-monetary, that's sort of an indirect compensation, that those also have to be disclosed, and kind of it allows a little more general language for those kind of unknown or unquantifiable future potential. So I think there's kind of a two tool approach here that can be used around disclosures for kind of known concrete amounts. You're going to get $3 per megawatt hour, or unknown amounts.
Yeah, Michelle, I don't have my exact notes in front of me, but wasn't there a requirement initially about the TPV having a question saying like, did the broker consultant disclose their compensation? And then that got removed in the rehearing order, right?
Correct. Because at the time the TPV is conducted, you may not know what the compensation is.
Right. Okay. That's what I remember reading something about that. And I thought that was interesting, because if the contract has been executed, then that compensation disclosure would be in that.
But I think there's also a time window for disclosure after the fact, right? Does it have to be at time of execution in the contract, or there's a window of disclosure where you can issue this disclosure saying, hey, this person's being paid?
Yes. So if you're in a situation where you're conducting a TPV, you have to send the customer a copy of the agreement within 3 days.
Post facto, 3 days. Okay, that's what I was recalling. Okay, Got it. Okay, I'm going to move on from commission disclosure because I think we've really covered this one well. And take us to kind of ongoing compliance. So now we're up, we're running, we're disclosing, and there's some new kind of maintenance activities on both the broker side and on the ESCO side that is also introduced through this legislation and its corresponding orders coming from the PSC. Shannon already referenced there's an annual filing fee of $500 that has to be paid annually. I think it's end of month August or August 1st. It's an August kind of annuity, if I recall correctly, that you have to kind of refile or kind of re-notice, re-up your $500 and say, yes, we're still in the market. If there are any changes, make those changes accordingly with your filings. I also thought it was interesting that it calls out specifically throughout the year. You also have a duty to notice any updates to your 800 number, to any of your form agreements. So if you filed, this is our standard customer disclosure, and then let's say you were to revise that at some point during the year, you're obligated to notify and sort of update your file on hand at the PSC with this updated forms. And then on the ESCO side, first and foremost, you've got to prevent payments to any unregistered parties for any activities after what's now, I guess, July 31st, our sort of compliance deadline. Now, this is a really interesting one to me, and I'd love to hear both Shannon and Michelle's points, because what I've been asked is, hey, you have this platform that does all of our commissions. I need to stop. I'm going to have several different buckets of kind of actions I need to take. I'm going to have some channel partners that I'm doing business with today in New York who are going to cease. They've explicitly decided they're not going to register, going to stop transacting. And I need to make sure that all the payments that I'm paying them are for deals, any sort of deal or deal related activities like add-ons, blended extends, et cetera. Any sort of transaction that happens with a date after July 31st does not get compensated should it come through the system. But only kind of grandfathered commissions get paid. So any payments that are for activities prior to that date continue to be paid as normal. And then I had another question, which I thought was interesting. I'm just going to sort of tee up what I'm getting asked. I'd love to hear kind of Shannon and Michelle's points of view, which is, hey, on August 1st, okay, it's the day after the compliance deadline. I've got new deals coming in every day from channel partners who, let's say they said, hey, hey, ESCO, New York ESCO relationship, here's my registration packet. You can see that I'm filed. Here's the email confirming receipt. But until now, December 31st, it also was extended as this recent PSC notice. I don't have an official list of registered parties in New York. So there's this window of time between brokers have to register, suppliers have to comply, and I get the official list. How are people handling this interim window?
Yeah, so on that front, those brokers and consultants who submit their registration package by July 31st are considered, I would say grandfathered in is probably the correct term, at least until a decision is made on their application. So if everything is submitted by July 31st, and it has to be by that date, if you submit everything on August 1st, you can not be paid until whenever the department decides that your application is good, which likely is not going. Yeah, which is likely not going to be until sometime in the first quarter of January, depending on how many they get. So until a decision is made on your submitted application, you're allowed to continue operating as you normally would. Once a decision is made, if it's positive, obviously you can continue forward. If it's a negative decision where they're not going to register you, there is a process for appealing that decision. And during that appeal, that this has not been specifically stated, but typically you are allowed to continue to operate as you normally would as well. One key point I want to make about that. So the actual application, as Shannon mentioned earlier, is submitted online. The proof of the letter of credit and the registration fee are mailed separately to the Department of Public Service. All of those things need to be in by July 31st, in my view, in order for you to be considered good. If it's not and they're delayed, you run the risk of the Department of Public Service saying that you didn't submit your complete application on time and not grandfathering you in. And the way that suppliers can view who has submitted applications, there is a specific matter number on the Public Service Commission docket where they can go and they can look up who has submitted. I don't know if this page is live yet, but the Department of Public Service has said that they are planning to create a broker and consultant page that shows all of the kind of registered brokers and consultants in New York, similar to what they have now for ESCOs. And also suppliers have been encouraged, I think, by their attorneys and the Department of Public Service to have those conversations with all of the folks that they work with to ensure that that information is provided on time, so that they can continue to work with them and not run the risk of being in violation of the law.
Shannon, anything to add on registration and kind of this interim period?
Yeah, I mean, I agree with everything Michelle said. So I think, one thing that we can do as brokers and consultants is communicate with our ESCO partners that, hey, here we have filed, here's our application, send it to everybody you work with. And that way, there's no disruption or delay and you being able to continue to price deals. I think the more we communicate with our ESCO partners, the better that this process will go, because we don't know how fast that webpage will get updated with, the information. And if the suppliers are waiting and relying on that, I mean, there's a chain of process they have to follow internally. So I just think the more you communicate, the more you show, I think the better. I know in the Texas process, a lot reached out and asked for a copy of your application while that period was kind of pending. And it's going to be a lot more, I think, than the DPS expects, right? I mean, I know when we were doing this in Texas, we estimated the number between 500 and 700. And I think there were 1,500 registered within, that first week. So
yeah,
I think
over 2,000 now. Right.
Yeah, so I think there will be a lot more than, well, I think now they know they are anticipating more than they were expecting, but that was, something we, provided some input on, just know that it's going to be more than you think.
Yeah, originally they expected a couple hundred, and I advised them that was not even close.
Yeah.
It's the second biggest single state market, and a broker has never existed on paper. So it's sort of like no one really knows how many channel partners there are, and much more broadly defined terms, like how far does that extend that number with this sort of very broad, if you get 1 cent of compensation related to sourcing to an energy supply procurement, then you're a broker. Well, that just really extends to maybe the traditional industry definition of what a broker is, out even further. And so how many parties are going to come forward and file really good?
That and the fact that 1099 employees are not covered really expands the number of folks who are going to need to register.
Yeah. I mean, you got another driver, which is the financial obligation, maybe driving that number down. So maybe they thought that would sort of prune out a lot of the small operators, but there's some small operators that do a lot of business that, this is their livelihood. You can't ask someone to just go find something else to do. So they're going to register. So, there's also some responsibilities on the ESCO to, not do business with parties who are not registered. So not just paying commissions, but also non-transaction, and even some teeth around if their transaction is facilitated by an unregistered party. I know this has come up as a concern for some of my customers, but that the customer agreement is potentially invalidated. Michelle, is that something that you could speak to?
Yeah, the penalties associated with this law are extremely punitive. I
Yeah.
would say,
No
from the
problem.
perspective of brokers and consultants. If you do not comply with registration, if you are in violation of any other aspect of the law, the penalties are forfeiture of commissions, they're invalidation of the contract, which could also require you to repay, to re-rate a customer, depending on, what penalties the commission wanted to impose. There's monetary penalties. You can be taken to court by a customer or the New York AG, in which you could be penalized expensially. And the
Guys have
penalties,
multiple of fees paid also. I think
right?
the written law. I
And the
think it's
and the
4
penalties
times.
are per violation, which could be considered, every continuing day, not just, the initial enrollment of the contract. So
Sure.
it is extremely punitive. I have heard of some folks in the market who were just planning to fly under the radar, or submit surety bonds instead of letters of credit to see if that would suffice. And I just cannot um, advocate strongly enough not to take that approach, because it's just not going to be to your benefit. The risks are just too great
The
to
stick
go
is
that route.
really big. There's a
And
carrot, but there's a massive stick.
sure, and I think because of that, also the other folks that you would be working with, typically the supplier or whoever, are going to be very attuned to this issue as well. So yeah, the penalties are very draconian.
Michelle, I should know this since I've read this 9,000 times. If I apply as a broker or a consultant, and let's say that I do what you said, I decide to submit a bond versus a letter of credit because that's what I think is right, and I get denied, can I reapply right away? Is there a waiting period? I haven't seen anything on that.
So typically you would be able to just go and get the letter of credit, but
Exit.
the issue is, if you're currently operating,
Yeah.
and you entered into any agreements in the meantime, or you were involved in the facilitation of any agreements in the meantime,
And you got
yeah, then
paid.
you're in violation, and you're subject to all of these potential penalties. And if that's the case, then even if you were to go and post a letter of credit as required, they would likely deny you on the fact that you are in violation and have committed all these violations
And I think from
of
the
the order.
supplier perspective, it's like you have a knowing defective application here. You're going to continue to
Yeah.
take on some very steep liability to pay. I have some customers that are considering, in these gray cases, just holding commissions, not necessarily denying them, but they may hold them back until further information comes forth. If someone is saying, "Hey, I'm going to not do exactly what's required, but I'm going to do something less than that. I'm going to continue to go forward." Maybe they're sort of hopeful that things will change. The TIPA white knight will ride in, and all wrongs will be put right.
Don't put that on me. Don't put that on me.
Or
Well,
Michelle.
to that note, that somebody did ask that question on our chat, thoughts about just getting a bond and sending in versus the LOC. And I think we'd all say, do not do that.
Yeah.
Hold your
Not
application. If you
not
don't
that
have
we're
the
giving
LOC,
advice, but if we're
yeah,
saying if it was me, I wouldn't do that.
if you don't have the letter of credit, if you don't have a complete application as the rules and standards are required of it right now, just hold your application, right? I mean, don't
And
Yeah.
stay
file
in communication with
something-
your supplier partners, right?
don't
About what
file
actions you're
something,
taking or
that's
not taking.
yeah.
And there may be ways to still get your commissions as new changes, new rulings, new filings come forward. All is not lost necessarily, but you may not be able to get new commissions on, or you may not be able to transact with those suppliers in the meantime, because it's not just the payment, it's the transaction itself that is in jeopardy. Like, that customer agreement would technically not be valid if you're not
Correct.
a bona fide registered broker consultant as of August 1st. So,
Yeah. My ask of the industry as a whole is let's do the right thing as the rule stands right now. Let's follow the rules, because otherwise this is just going to get more complicated. And as we all know, it's already complicated enough. So that's my ask, on behalf of the industry, and trying to kind of get this corrected, I guess would be the right word I would use in this situation. Michelle, I mean, do you agree?
Yes, absolutely.
let's
There
work.
are other remedies that you can pursue now if you want to potentially challenge the surety bond, which could potentially extend the time frame for compliance. So if that's your thought and you cannot comply today with what the rules currently are, then explore those options now. Don't just willfully violate the rule, because it will not be favorable in terms of penalties.
Yeah. And Michelle will be in New York, like Nate mentioned. I will be
Yeah.
there. TIPA's legislative consultant will be there. A lot of these questions, like, we're going to help
We'll
try
go
to cover.
deeper on.
But
Yeah.
just talk to
We'll also
us.
get a supplier's firsthand, instead of speculating like, hey, what is NG's position on this?
Yeah.
What is Mantis's position on this? You'll hear some large participants in the market who are very active in New York saying, hey, this is the approach we're taking. I think that could be really valuable to be in the audience. Last thing as we close out, data security agreement. We're not going to go through all of this stuff, but there is some thread of conversation throughout this legislation rulings that if you have customer confidential data that came from the utility, that you have some duty to protect this data, and the standard is extremely high. We had to deal with this. We were serving CCAs back in 2019 and 2020, and so Enerex as a company has signed off on the DSA, and we have enforced this self-attestation and issued it to each of the joint utilities, as is the requirement, saying, hey, we're going to be having customer utility data, and we're meeting all of these standards. So I put this slide in here mainly as a resource to our attendees. I'm not going to read it. There are 16 requirements. Just take a moment and read those. And if you don't want to keep up with that yourself and you plan to get HU, which is maybe one of the highlights of this licensure, is now that you have recognized status in New York, you can actually get utility data, whereas brokers had no access to this unless a supplier gave it to them previously. So there's one maybe silver lining, and data drives a lot of what we do in this industry. And so if we had a way to get that without this onerous burden and things kind of made more sense, I think we'd be net positive here in terms of like, hey, we actually got something throughout this process for the broker community. And we'll talk more about that in New York. Again, just a resource page I'm going to share. We covered the Q&A, and I'll just close this out unless there's any final words from Shannon or Michelle. We'll see you all in New York next week.
I'm good. Thank you
Okay.
for having us.
Thanks so much.
Yeah,
Shannon.
same. Thank you.
Okay, bye-bye.